Shares of gaming gear giant Corsair up 9% this morning after earnings and sales beat the expectations, adding on to a rally off the lows the last 4 months in a stock that is trying to make a comeback after a big sell-off in the post-COVID world after a big rally in the middle of COVID when everyone was loading up on new rigs when we were stuck at home. Let's talk with the CFO joining us. Michael G. Potter is Chief Financial Officer at Corsair Gaming. Michael, welcome to the show. Thanks for being here this morning.
Thanks. Nice to meet you, Oliver.
Absolutely. Likewise. Tell us about this past earnings. You had two beats here that the market seems to be very happy with. Top line, bottom line. What drove that?
We had almost $400 million worth of revenue for Q4. That was above market expectations and at the higher end of what we thought was going to happen. We had good margin recovery driven by lower freight expenses and just higher volumes going through. And our EBITDA was $32 million for the quarter. That was the best quarter for revenue and for EBITDA in the year so far. So quite good performance for the quarter. For the year, we did $1.375 billion of revenue and EBITDA of around $47 million. So you can see Q4 was a substantial contributor to our 2022 results.
Is that typically how it is, holiday season, people buying a lot of stuff?
We're not usually so skewed only to Q4. The self-built PC market is spread a little bit more through the year. It's not quite as seasonal as some other of our product lines. But the beginning part of the year was a lot slower, and we gained momentum as the year went on. We're really entering 2023 in a much better position than we entered 2022. Inventory levels, both our own and in the channel, are a much, much better place, really more the appropriate level it should be. We fortified our balance sheet near the end of Q4 and have about $150 million of cash on the balance sheet. Plus, we really got a lot of tailwinds in the self-built computer market where we supply a lot of products to do that. Great releases of both CPUs and GPUs by the giants there between Intel, AMD, and NVIDIA. Just excellent products. Probably about the best time to be building a gaming PC in the last 3 years or so.
It seems like the big development here in the short term, at least, is that bottom line. As revenue growth has slowed, we still saw a contraction on an annual basis, and your outlook is one for flat to single-digit revenue growth. So it seems the focus is on the bottom line right now. Is that just because still generally people are pretty fresh and up to date on the actual product? You don't expect to have big booming top-line growth, so you focus in on the bottom line? Is that a fair characterization?
I think it's a little bit more just being cautious. There's a lot of economic turbulence around, lots of talk of recessions. You see layoffs and such in the news. Not seeing a huge impact on us in the self-built gaming market. The more casual peripherals market, there certainly is some effect there. We're seeing flat to up for 2023. I think compared to a lot of our tech peers, that's actually very good news. A lot of them are predicting a much tougher 2023. And we are expecting to more than double our EBITDA. The mid-range of our guidance for 2023 is $100 million. So that's more than twice what we did in 2022. I think that resonated well. I think people were hoping that next year, like in 2023, would be better. They liked the story about the growth, and they liked our discussion of some of the exciting products we just released, and we will certainly be releasing more great products throughout this year as well.
Gamers definitely know your company, of course. You offer all kinds of gear from the PC, keyboards, the headsets. You can go all the way up to thousands of dollars to the very, very high end. From an investment perspective, walk us through, Mike, where you're getting the parts, because that to me is very interesting here. Is we're talking about inflationary aspects. We're talking about chip makers that have showed us there's a slowdown in some of the demand for their end products. Are you generally going to the chips and the companies that we're talking about from the semiconductor side to build your parts? And how do you manage that right now? How do you say, okay, maybe a chip maker is giving me a good deal, I want to load up on these chips, but I also don't want to get too much outdated stuff a year from now where they're going to have a better product? How do you find that balance?
Yeah, so we make the components that go into the systems, not the actual very high end. So we're not making CPUs, we're not making motherboards, we're not making GPUs, the graphics processing unit. Most of our chip purchases are either in the form of memory chips, which is a constantly flowing market and where the company started, and microcontrollers, which they don't tend to change very often. So there's not a huge risk of the technological obsolescence in the semiconductors inside of our products. So we're pretty well positioned there. For us, it's more lead times to ship from Southeast Asia to our main markets in the Americas and Europe, and the shipping costs. Lead times for shipping have come down a lot from 2022. So throughout the year, started about $20,000 a container and ended the year about $3,000 a container on some of our routes. So that was a very nice improvement there. And it used to take 12, 14 weeks during the middle of the pandemic to get things from our factories into our warehouses. And now it's more around 8 weeks. And that makes a big difference. Really shortens the planning horizon, lets you refresh faster.
Speaking of that refresh, we had an analyst on yesterday that had two charts. One was the mobile chip market into mobile devices. The other was the chip market into PCs. And his view was that there is a huge gap between these. He expects continued slowness in the PC realm. He expects the refresh rate that people have for mobile devices to keep that part of the industry humming. When it comes to the real hardcore gaming market, which is your market, what does that refresh look like? We saw so many people taking up streaming, watching others, participating, getting the best of the best. Personal incomes were soaring in 2020 and early 2021. How do you gauge what that market looks like a year from now? Do you expect to have to cut any prices if demand doesn't pick up?
So demand in our components and systems segment, which is about 2/3 our revenue, is very, very strong right now. We're actually struggling to keep enough inventory for some of the hottest products and having to airship things in. So that's in pretty good shape. Peripheral space, some of our competitors were not as aggressive as we were in reducing inventory. We saw the slowdown earlier last year and started taking action pretty quickly. So we exited the year in much better position. Some of our larger competitors in the peripherals area, I think they left the year with even more inventory than they'd like to have. So they're continuing relatively heavy discounting to start the year. We do expect that to clear up in a quarter or two. And then, the second half of the year will be much better shape there. But, for streaming products, I'm using a bunch of our Elgato division's products right now. So they're extremely well known for their cameras, their Stream Deck, their lights, the whole system around getting video and audio out into streaming. They introduced a new product recently called the Stream Deck Plus. Been a very, very popular, very well-selling product. Has analog dials on it, which have never been there before. It lets you easily change lights, increase, decrease volume. For video editing, it lets you tick along and make marks in the timeline when you want to edit. And it's very powerful and super programmable. We have a new Xeneon Flex 45-inch monitor that's just been released. Uses the latest high-end gaming OLED monitor from LG, and it can be completely straight, or you can reach out and bend it into a sort of a nice curve in front of you, depending on the use. Very innovative, has a lot of attention to it. We, in the Elgato, also released a Facecam Pro camera recently. That's 4K resolution and 60 frames per second. Pretty much as good as most DSLRs that a lot of the top-end streamers use. So a lot of innovation on both the gaming side for us and the streaming side as well.
Okay. All right. So still focusing on the product, the innovation, and hoping for some stabilization here in the bottom line. It seems like you guys have achieved that as the stock was responding to these earnings beats. Your shot looks good. Your stock looks good. So I guess the product and the company are working well right now. Michael, thank you for the run through.
Well, thank you very much. Thanks for having me on, Oliver.
Yeah, for sure. Looking forward to more. Michael Potter, Chief Financial Officer at Corsair Gaming. Shares up 8.5% right now.